This is Matthew Cratter from Bitcoin University. Today I want to provide you with yet another example of what's commonly called Bitcoin derangement syndrome. Now, we all suffer from cognitive biases and cognitive dissonance in different areas of our lives and at different points in our lives, but often nowhere so much as in our early encounters with Bitcoin. So the purpose of this video is not to single out or make fun of this particular individual with whom I had an interaction on YouTube, but rather to provide an example of something that happens more frequently than you would expect when people engage with Bitcoin. So this was a common thread I had with Spiralizing on this video, Bitcoin, the exits are closing, about 9 days ago. And it's quite a long thread, but I think it is interesting to take a look at. So his conclusion from this whole video, I'm going to be saying he, I'm not sure if it's a he or she, Spiralizing said, sounds like Bitcoin will succumb to the dollar, which was a very bizarre takeaway from a very bullish video on Bitcoin. And so my response, take another look at the Bitcoin US dollar chart. This is probably not what succumbing looks like. Here's an example of that chart. And then Spiralizing gets back and says, I just did. That's what bubbles always look like. My response, no, bubbles never last 15 years. And I provide an example of the Tulip bubble, which really just lasted about a year and a half. So I pointed out that bubbles never last quite as long as 15 years. Spiralizing responded, pretty sure Madoff's lasted longer. My response, Madoff ran a Ponzi, not a bubble. There was no public pricing of an asset that he issued. Bitcoin is also not a Ponzi because it's decentralized and there's no central actor like Mr. Ponzi. Spiralizing responds, I know what you're talking about. If you define Madoff's credibility as an asset, the model dynamics can be approximate. But if you want to get strict, the comparison you're doing with the Tulip bubble is also unfair because you're not considering other factors that can make a difference in the amount of time the bubble takes to pop: social norms, monetary policy, technology. I would argue that this is actually very similar to the bank runs we saw last year, that modern technology and modern communication channels actually make it faster for bubbles to pop because you can have faster dissemination of information. But either way, it's not a bad point. But I responded then saying a better comparison to Bitcoin, rather than comparing it to tulips or some sort of bubble, a better comparison would be with the chart of Amazon. Lots of huge run-ups and drawdowns, especially 1999 to 2002. But then what happened? It started to hit new all-time highs and never looked back. The chart of Bitcoin looks a lot more like Amazon than tulips. And if we take a look, we can see here's the chart of Amazon. I believe this is a log chart, just as this Bitcoin chart is a log chart. So this is really more like what Bitcoin looks like. It doesn't look like the tulip bubble. And then I asked Spiralizing, did you also go around telling everyone that Amazon was a bubble? Be honest. He or she responds, yes, of course, and I hope the tech bubble pops soon. Then he goes on, of course, to talk about the intrinsic value of assets. Even stocks don't have intrinsic value. You can't crack them open and look inside and find that special intrinsic value. You can value them using cash flow or revenue growth or whatever model you have. But anyway, he goes into intrinsic value, which is something that seems to always come up in these Bitcoin discussions. He says the problem here is the intrinsic value of the assets. While some companies make an effort to evolve and innovate, others don't, and their values collapse because they don't have anything to offer. But look, I have no stake in the game. I'm here because I like to try to understand complex systems. And the way I see it with Bitcoin is that its intrinsic value was to popularize blockchain and the concept of decentralization. But despite lots of efforts from people to come to new kinds of utilities for Bitcoin, they failed tremendously. And with the end of the era of easy money, I don't see how the network will be able to survive. My response, you do realize that Bitcoin has been hitting new all-time highs as the Fed has been ending ZIRP, zero interest rate policy, over the past 2 years and shrinking its balance sheet. The problem is that you're thinking stocks and not currencies. Is the US dollar in a bubble, for example, against the Turkish lira? When do you expect this bubble to mean revert? And I referred him to this chart. This is something that is never going to mean revert. The US dollar will continue to outperform the Turkish lira, probably forever. You will have drawdowns as we see here, but this is the general direction that things are taking. And again, this looks a lot like the chart of one currency winning, another currency failing, which is just what we see in the Bitcoin dollar chart. We see the strongest, soundest money ever created or discovered outperforming US dollars. Spiralizing responds, Bitcoin is not a currency, at least it doesn't behave like one, nor has that use case. And trying to use it as a currency is trying to go back to the gold standard, which has already been proven wrong. It's difficult to find an unbiased or fair opinion about Bitcoin if you have money invested in it. So I guess you do. My response, now you're being intellectually dishonest. in terms of him saying that Bitcoin is not a currency. It's literally legal tender in El Salvador. I use Bitcoin as a store of value, which is one of the functions of money or currency. I use Bitcoin as a medium of exchange for my family. Lots of other people do too, and I refer him to the Bitcoin map, Bitcoin jungle, Bitcoin beach, and various other places where Bitcoin is used as currency or as money. And then I respond to his comment about the gold standard failing. Not true. The gold standard ended because gold is expensive and difficult to move and assay. So governments like the US started cheating. Unlike gold, Bitcoin can be zapped anywhere in the world and it's trivial to assay. So Bitcoin is sound money, it's hard money, but it's a much better version than gold. Spiralizing response. The big problem now is that the first adopters already are super rich compared to the new ones. That makes it harder to use as currency, probably only useful for people like you. I respond, I was not an early adopter of Bitcoin. I got into it in 2019. What you are missing is that Bitcoin is an entirely voluntary system, unlike fiat. No one is forcing all those merchants to accept Bitcoin for their goods and services. Those merchants actually want the Bitcoin. What do you like to invest in? Spiralizing responds, I'm sorry it's difficult to reply to you in an honest debate when your channel keeps deleting my comments. This is something that my channel's been experiencing for years now. I've worked with YouTube trying to stop it, and there's nothing I seem to be able to do about it. And so this is one unfortunate thing in these conversations. People accuse me of deleting comments. So you'll see some back and forth here. This is a problem with YouTube. I did not delete your comments. Then I respond, I have nothing to fear from your arguments, which have been quite weak, to be honest. Please try posting again. Blah, blah, blah. I'm sorry to break this to you, he says, but anecdotal evidence is useless in these cases. And yes, even in El Salvador, where Bitcoin is quote unquote legal tender, research has shown the opposite of adoption as mentioned here. Are cryptocurrencies currencies? Bitcoin is legal tender in El Salvador by Alvarez. This seems to be the article that he's referring to. As we're going to see, he seems to really like it because this was published in Science, which definitely makes it science. After El Salvador adopted the cryptocurrency Bitcoin as legal tender, its government incentivized it with the Chivo wallet, blah, blah, blah. Despite major incentives, Bitcoin was rarely adopted, except among one privileged group, young, educated men with bank accounts. Well, that's not a bad group to get adoption in. But the interesting thing here is rather than doing his own research, for example, I referred him to Bitcoin map. We can see El Zante here. We can see 30 merchants accepting Bitcoin. We can see 15 merchants accepting Bitcoin down the coast line. And then if we want to scroll out and see Bitcoin adoption in El Salvador and all the different merchants, we can look at this map of actual merchants who are not necessarily wealthy, but they do want people's Bitcoin and they're willing to sell things for Bitcoin. Here's 212 examples in the San Salvador area. And instead he prefers to refer to some scientific, quote unquote, scientific publication saying that anecdotal evidence is useless. Well, this isn't anecdotal evidence. This is a map of actual vendors on the ground who accept Bitcoin. And then he goes on, and in my personal take, with the age of easy money over, it will be very hard for people to put their cash into speculative assets. I just don't see how the Bitcoin network is going to be maintained. This is something that was created with a different system in mind. Making a case that Bitcoin is not a bubble when comparing it to the Tulip is a bit absurd because it can take longer to pop, etc., etc. Again, I'm just a spectator here. I like to understand complex dynamics, and I usually like to follow frameworks similar to the scientific method to understand things. All the references you showed me are from either speculators or journalists that have money in the game, and I don't know you, but I don't usually trust that kind of people that easily without doing actual research with an appropriate framework. So then in response to his personal take that the age of easy money, easy monetary policy is over, I responded, easy money ended in April 2022 when the Fed and other countries, other central banks, I should have said, started to hike rates. And yet Bitcoin was somehow able to hit new all-time highs recently. Could it be that Bitcoin doesn't need ZIRP, zero interest rate policy? You said that you think Amazon and other tech are still in a bubble. If you've been wrong for 20 years, maybe you should reevaluate your framework. You're probably some kind of value investor, if I had to guess, and yet you're too close-minded to see the value here with Bitcoin. Spiralizing responds, monetary policies take several years to actually change the system, so don't worry, you'll see the change. And if it depends on the miners, it will probably die. In other words, Bitcoin will die because it is very expensive to maintain. It is an unsustainable technology. Science updates itself. That's the beauty about it. And what science has told us, in other words, this publication in the magazine, in the journal Science, what science has told us so far is that Bitcoin as legal tender hasn't worked. Then he responds that, don't get me wrong, I'm a very open-minded person. That's one of the reasons I'm still investing my time talking to you here, because I want to understand the reasoning behind all this. I asked him what would cause Bitcoin miners to die. I don't think I ever got a response. And in terms of him saying I'm a very open-minded person, my response, I don't think you're very open-minded. You believe that Amazon has been in a bubble for 20 years when it's been one of the most important companies for the past 100 years. Bitcoin has a market cap of over 1 trillion, which is an accomplishment in itself. And yet you want to try to write off the free market's pricing of this asset. You sound like a value investor with a single ruler that you try to use to measure everything. Have you taken the actual time to learn what Bitcoin nodes do, how miners and mining pools function, how the difficulty adjustment works, how Bitcoin miners can help to stabilize electrical grids and monetize stranded energy? Do you know what proof of work is? Do you understand ECDSA, etc., etc.? What I see is someone just applying labels like Ponzi and bubble without having put in the hard work of understanding Bitcoin and how it works. He responds, now you're putting words in my mouth. I never said that. I just said that right now the tech stock is in a bubble and the facts you're listing come from unreliable sources. Please list actual scientific papers with a clear methodology to follow. He goes on to say, I know how proof of work works, etc. There's a bit more back and forth, and then I respond, I can tell that you're one of those people who needs ideas to be blessed by venerated publications like Science, the magazine Science, in order to believe them. The funny thing is that you could research these things yourself like a real scientist collecting data. And I again link to Bitcoin merchants, the map of Bitcoin merchants in El Salvador. He says he doesn't want to bet against Bitcoin because right now it's a losing bet because there's a lot of price manipulation from Tether. I was just waiting for him to throw in that FUD point, which I addressed many years ago here. Will Tether crash Bitcoin? This is just yet another objection that people seem to have to Bitcoin, somehow thinking that Tether is printing money and pumping things when it's actually all the central banks, which are much larger and are doing something similar. It looks like he also didn't like my Bitcoin map. Collecting quote unquote real data and doing research following the scientific method are two very different things, but thank you for the pretty visualization. And that's sort of where the thread peters out. If we want to review quickly just how Bitcoin has responded to Fed rate hikes, the Fed started hiking in March of 2022. This was when Bitcoin was trading at approximately, let's call it $39,000 per coin. It did decline going into that summer. A lot of that had to do with Terra Luna and FTX and all these other problems. The Fed hiking interest rates literally blew up the U.S. banking system in early 2023. We talked about Silicon Valley Bank and the other banks when that happened. These banks required bailouts. In fact, the whole U.S. banking system really required this backstop called BTFD. And so the Fed hiking interest rates literally blew up the U.S. banking system. Fed hiking interest rates did not kill Bitcoin. In fact, the Fed bailouts, the bank bailouts and money printing actually helped Bitcoin. So what we have here, we have a $1.3 trillion asset. And as such, it deserves to be engaged with some intellectual honesty, which I don't think Spiralizing was really showing. This is what Bitcoin derangement syndrome looks like. If I lose one argument, I'll immediately pivot to other arguments. If I lose those arguments too, I will assert that you're not a trustworthy sort because you've actually put your money where your mouth is and own Bitcoin. I would argue it's actually the opposite. Once you have skin in the game, then you have a real incentive to understand things, especially when you have most of your net worth in Bitcoin. I want to end with a pretty funny video. This was a tweet from Robert Breedlove. In the same month that this senile old man was suffering from peak Bitcoin derangement syndrome, I was getting my first and only tattoo, a Bitcoin symbol under my right bicep. Putting your skin in the game is always superior to glass ball gazing. So I wanted to end with this.
And I know who's behind Bitcoin. And it ain't some fucking Japanese guy in a cave. I know the guy. And when that comes out, you heard it here first. Bitcoin is going to zero. Zero. When it comes out, zero.
So that's what we have, Bitcoin going to zero when it was trading at 3,800 in November of 2018. It would seem that the history of Bitcoin derangement syndrome is very long and storied, and it's something we should continue to see on the path to hyper-Bitcoinization and a Bitcoin standard as people experience the cognitive dissonance and the rage at not understanding Bitcoin. If you enjoyed this video, be sure to hit the subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks all for watching, and I'll see you in the next video.